Okay, so let's get started. I'm Jeanette Sims. Started TradeThirsty several years back with my business partner, Hubert Centers. You may know Hubert Centers. There he is, fourth from the left in the cute little picture you're seeing there on the screen. And at TradeThirsty, what we do is we run these events once a month to gather some of the best minds in the business to come and teach to you an hour at a time, whatever topic they're really good at, and hopefully you'll learn something amazing and put us on your calendar month after month after month and pick one of these guys. I mean, not everybody obviously is going to be the right guy for you, but pick the one that you feel is trading the markets you want to trade, and it is real. And it's tough to find some real guys in this industry, I'm not going to lie, but these guys that you see on the screen, these are the cream of the crop, in my opinion, and we're thankful to have them here today with us. I'm going to go ahead and start my recording, and we will get real here. Okay, all right, welcome everybody. This is Jeanette Sims. Welcome to Traders Roundtable 2017. This will be an annual event, so you're here for the first time ever. There's all the gentlemen who are going to be joining us today. I'm going to share with you our schedule. We've got RobHoffman, who's going to kick it off this morning at 9 a.m. Hubert will be on next. Then Steve Bigelow will come on at 11 a.m. These times are all Eastern. Rob Booker, Steve Primo, and then Larry Gaines. So that is going to be the lineup for today. Of course, there's all risk associated with trading. Please be careful if you're going to trade in the markets, and latch on to somebody that you believe is going to take you down the right path. Don't try to go do it on your own. Trust me, I've seen some people do that. It doesn't end well. So today, every speaker will have an hour at a time. And we'll try to off depending on technology and just the way things work. But we're going to kick today off with RobHoffman, his award-winning strategy you can use right now. And Rob and I are great friends. We've been friends for a long time. And he and Hubert and I feel like just if I had to be stuck on an island with anybody in this business, it would be the two of them because we have a really good time together. I'm going to turn the mic over to him. We are recording. Can't guarantee it. We have a record number of registrants today. So if you're here, I would recommend you keep your butt in your seat and don't leave, because if you leave and come back, chances are you might not have a spot, and I cannot control that. Once we max out, and that's all she wrote. Let me find my friend over here in attendees. I can tell just by the number that we're at right now that we will more than likely top out today. So you guys stay where you're at. All right, Rob, I'm making you the presenter. I'm making you the organizer so you can share your stuff. Can everybody see Rob's PowerPoint now? That's a see, no tie. Truth.
Yeah, I'd just like to point out that was fake news. Fake news. You have never ever in your entire life seen me with a green tie. So that caricature is fake news. All right, that's what I'm saying.
Don't short it. Nobody short it.
I'm putting a tweet out there today. All right, gang. Thank you very much, Jeanette. Thank you very much for that warm introduction. And I would definitely be stuck on an island with you and Hubert as well. And Hubert and I, of course, would protect the island barriers with our long-range sniper rifles. So we're covered. So good stuff, gang. Good to see you guys this morning. Good morning to all of you. Let's get right into it. Jeanette did mention risk to you here, so I'm not going to cover that. I do want to say we are going to hold off on some questions till the very end of this presentation, because you can see we're about 6 minutes into the hour, and I want to show respect for my friend Hubert to go ahead and let him hopefully start on time. So we've got a lot of people there, but we'll hold off on some of the questions that to the end. A lot of them will be answered for you, I'm quite sure, as we get through the presentation. With that being said, though, I plan to make it worth it. I've got some really great stuff for you today. Last year I was fortunate enough to win a lot of trading competitions around the world. I'm going to show you and put together multiple strategies today, so you can kind of see how those come together. And we used some of these as recently as yesterday in the live trading room, and I'm going to show you that as well. So how will you know if you're in the right place today? If you trade stocks, options, futures, forex, and you're a day or a swing trader, then you're in the right place for what I'm about to go ahead and present. My name is RobHoffman. You'll see there's my picture there. You will see no green tie. Fake news, I tell you, fake news. But right there is me, and my website is becomeabettertrader.com, and you're welcome to go and read more later on that. Last year I was featured in some filming at the CME for a bunch of their product lines. It's been featured in international trading magazines here, or international magazines like The Italian, one of the top financial magazines in Italy. Had a briefer version of what I'm going to share with you today, mentioned or reviewed and presented in 5 different languages. here in Traders Magazine. We also went in last year. Actually, we're featured in Modern Trader Magazine. If you have a subscription for that, hopefully you were able to catch that because that was great. And then last year, Technical Analysis Stocks and Commodities Magazine did a 4-page write-up on this as well. So lots of places to go ahead and get some of those great articles, learn a little bit more about my insights in that, and what we're going to do some sharing with that right now with you as well. The real reason why many of you are here so early in the morning, I know it's unbelievably early for many of you. In California, you're just waking up. Good morning to you, and those of you around the world, good afternoon, good evening. So I've been fortunate enough to win all these trading competitions around the world with real money, and some of these events pretty intense. And I want to show you some of the same techniques that we use to use those, and also the same techniques I'm using to train for some of the ones I'm coming up to. I got some big international competitions coming in a few months. I chose to take a break from the whole money show Trader Expo thing this year because of my 4-month-old son, my 2.5-year-old daughter, but I am focusing on some of the big real money international competition with multiple people coming from around the world to be part of those. But I do like to remind people, gang, I'm just like you. These are the books I checked out from the library when I was a teenager, and I always get a kick out of it. I could look at this 1,000 times. How to read the Wall Street Journal. That's what I picked as a teenager to learn the markets. What do you know, right? So I've come a long ways, obviously, and I'm here to show you some of those strategies today. But this was me. I had, in my early 20s, I had 3 jobs, and I had a son at home. I had a child when I was a child. But I always had this passion for the markets and chess. It was really weird. So I kind of used those strategies from chess thinking moves ahead to think about the market. And I really think that helped me and my strong determination. And fortunately, no, this is not me. He is wearing something green in there. That green shirt, that's my son. And I'm proud of him as a United States Marine. And so fortunately, despite all that madness, I was able to become a trading champion and raise a darn good son. Then unfortunately, I got this lovely, lovely wife. Many of you have met her around the world to different trade shows and that. I am super blessed. She's super awesome. And there's my wonderful daughter and my son. He is now 4 months old. So, gang, when everybody tells me, oh, boy, it's hard to learn trading, Rob, I'm so busy. You know what? I know what it's like to be busy. Trust me, I know what it's like. So the strategies I try to use, I try to keep it simple, and so very blessed. So we got a lot we're going to cover today. In the end, what I'm going to do something different today. I've only shown this one other time now. I'm going to do several ahas that you've always wondered about, putting multiple strategies together and some key updates. So those of you, most of you here are going to get some brand new information you've never seen before. Plus, I also did some trading yesterday, so that's going to be new information to all of you, unless you were in my trading room yesterday morning. So the strategy, what's special about this, thanks for those nice comments, gang. You guys are awesome. What's special about this strategy here is it helps me get in, stay out, or get out of trades. And I'm going to show that to you in just a minute. Also, it acts as great key support or resistance until broken for targets and continuation trades. In fact, here's 2 trades and loss avoidance over the last week where I did this for continuation and getting out with a profit in right in front of my live trading room. So here we're going to talk about these inventory retracement bars. I had 4 of these here, but the market was looking really good. We were generating some sell signals here, but I saw 4 IRBs back to back. That's a big fat warning sign that we may not break that. Sure enough, so I stayed out of the trade. Sure enough, look what happened. The thing tore right back to the upside. Would have ripped my head off if I would have gone ahead and taken that trade. So many people take trades into these IRBs, and that's going to be deadly. At the same time, when we break my IRBs, that could be great for continuation trades. And this was a trade I did on a 2-minute chart there the other day, and also combined nicely with my M pattern strategy, and that grossed $1,250. So that's right, one and done trading. So really nice, single entry trading. And then yesterday. We went ahead and had the IRB, which we're about to go ahead and teach you in just a few moments here. We had the IRB, great indication, tied really nice into with my M pattern sell strategy. And so what happened was I was long the DAX, and I went ahead and I got out because of the IRB. So here we talked about a loss avoidance, grossing $1,250, and then taking my profits yesterday on this DAX trade well because of the signal. So that's exactly what we're talking about. Great tool. So let's get right into the strategy here. This is a price action based continuation trade, trending trade. That's really important. I want to trade this with a trend. We'll talk about that more in a minute. When do I use this? It's most effective in trending markets. Okay. How do I identify it? Looking back over the last 20 plus periods on the time frame you're looking to trade. So if you're looking to trade on a 2-minute bar, a 5-minute bar, a 15-minute bar, an hourly bar, whatever you play, a 3-minute bar, 6-minute bar, you pick the number. Anything 2 minutes or higher for this particular strategy is what we're looking for. And where the open and close are approximately 45% or more off their high in an uptrend, or 45% or more off their low in a downtrend. So basically what we're doing is asking ourselves how much wick is showing. So in a downtrend, we're looking for what I call my accumulation IRBs. Okay, and what these are is they're institutional retracement bars, right? It's an institutional inventory. So I want you to think about that. So in a downtrend, we're looking for these things I call accumulation bars. I'm looking where one or more institutions is not only stopping the market from going down, but they got so much inventory they're driving it back up. So I'm looking for bars that are 45% or more off their low. Here's 4 individual unique examples. This is not a 4-bar pattern. 4 individual unique examples where you can see we're 45% or more wick on the bottom side, all right? And on the top side, it's going to be the same thing. I'm looking for the top 45% or more that need to be wick. And you can see all 4 of these are 45% or more off the high. And again, these are 4 individual unique examples, not a 4-bar pattern, okay? So where is the entry? It's typically 1 tick, 1 cent, or 1 pip above or below the signal bar. All right, so in that case, I'm going to be looking to go short when we get back down below this. Remember, we're in a downtrend now, so I want to break back down below. I want to see where that one or more institutional's inventory is no longer there. So that's where the entry is, 1 tick below the low of that in a downtrend. Where is the entry in an uptrend? It's a 1 tick above the high. So once that one or more institution's inventory is evaporated, has been expended, then I want to see us break through this high here and take off to the upside. So that's a real important key there. That's what I'm looking for entries. Now let's talk about exits. First of all, trailing or to the next support level for a profit exit. All right, so let's talk about my trailing stop method for a minute, and then we'll get back to stop losses. So 50, 80, 90 price. That's what I want you to think about, 50, 80, 90 price. So we're trailing trade. We want to identify the target before we enter the trade. My favorite trades are on classic daily, weekly, monthly floor trader pivots. Not all the pivots where everybody's putting their names on them. I'm talking about classic floor trader pivots and long-term S&R levels like the 50 and the 200-day MAs. When 50% of the way to the target, we start trailing by 50%, or by 25% of the profit, the 50% of the trailing, which equals 25% of the profit earned. When we're 80% of the way to the target, we want to move up to 80% of the trailing profit. And when we get to the target, then we trail up to 90% of profit earned. If the target is broken through, then we want to trail right behind until the profit stops us out. If the price stalls at the target, we just move it up to the current bid or offer. We're going to look at all these in a moment. This is one of the biggest lessons I've learned that changed my trading career. Several years ago, I had this big loss, and because I trade live right on the screen in front of people, people got to see it several years ago. All these profits that I make, any losses that I make are done right on the screen in front of people when I do like my live trading in front of people. So, but what I had was I had a profit on the board. I actually had a profit on the board, but I didn't trail back down and turned it into a huge loss. Great learning lesson several years ago for me. It set me off on the path of all of the trading competition wins and accomplishments in my trading room and these trading competitions around the world. So pretty excited. So the golden rule, trail your stops so you don't have things like news take your winning trade and turn it into a loss. That's what happened like for me years ago. I got caught in the news. So in other words, so here's the target in this particular case. So the trade is entered here, all right? And this is actually a live student trade of one of my students. I just got done teaching this concept to, and he went right out and did it. We filmed the whole thing. So the target was up here. The entry was here. And then when we got 50% of the way to the target, we went ahead and started trailing by 50%. So right here. So that's basically locking in 25% of the overall anticipated move. Then what happens is as we get 80% of the way to the target, start trailing by 80% of profit moved or earned. So I don't want it to go all the way back down here to 50%. That's terrible to give all that back. Then when it gets to the target, we trail it up to 90%. Why? Well, what's more likely to happen when it gets to that level? It's more likely to stop and reverse, isn't it, gang? So I want to make sure I'm locking in most of the profit. It'd be criminal to have a stop loss. There's a lot of schools that charge a lot of money out there that teach you to have your stops way back behind. And they say, hey, it either hits your target or it comes all the way back down and takes you out way back down below. That is just absolutely insane. That's absolutely criminal. And again, think about my biggest loss in my trading career. I had a profit on the board, didn't bother to trail it, and then turned it into a loss. Completely unnecessary stuff. I adapted years ago. Most of these schools never did. And so think about that. So I have an adaptive trailing stop methodology here. And then if it doesn't break through the resistance, then you move the stop right up to the current bid and offer and wait to be taken out. So that's that strategy. So where's the stop loss? It's 1 tick, 1 cent, 1 pip below the low or the high of the signal bar or predetermined loss value, plus a little secret here. So what happens is, remember now, in a downtrend, I'm the market for the market to go down, pop back up, roll back over, and go short down below. Okay, so where my stop loss is going to be 1 tick above the high of the signal bar. All right, so remember, we're going short down below here, 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 and here. Okay, now, we're going to talk about big long bars like this in a moment, but let's focus on these three right here. So what I want to do then, in a normal bar situation, I want to, so when the average true range isn't three times bar larger than the last 5 or 6 bars, I want to go ahead and look, take a trade down below. My stop loss is going to be up above. I want to take a short below. My stop loss is up above. That's the official stop loss. But I'll tell you a dirty little secret here. The reality is, if it gets back more than 60% of that bar, of that signal bar, there's a strong statistical probability it's going to go up to here. Okay, so if you're looking to try to mitigate risk in that, you can even consider stop losses that either are back beyond 60%. Because what's supposed to happen with these trades, as I'm going to show you in just a few minutes, these trades, when they break down, then once that one or more institutions' inventory is gone, this market is expected to really whoosh back into the direction of the original trend. So it's basically a short-term pause. In an uptrend, it's going to be just the opposite. In an uptrend, we want to go long when that inventory is broken through, and we're looking for continuation. But if it doesn't work, then we're looking for a stop loss back 1 tick below the low of that bar, or if you follow that dirty little secret, 60%. Okay? Key points to remember. Think about the concept of rocket fuel. If it's moved a large range quickly, the breakout is likely to at least temporarily fail. Now, that brings us to these bars. When you start seeing these bars that make the inventory retracement bar that are 2 to 3 times the normal average true range. So let's say that your normal bars here are looking like this, the last 5 or 6 bars, and then all of a sudden your inventory retracement bar ends up being this big, long bar. Well, here's the problem, gang. Remember now, the market's shot all the way back up to here. Where's our entry? It's back down below here in a downtrend, right? That means it's got to go all the way back down here before we take the trade using this particular strategy, all right? Well, so the problem is when it's got to use up that much energy just to get back down there, it's much more likely to have at least a short-term bounce and sometimes multiple bounces before it ultimately breaks. And if there's high volume associated with that bar, it's very possible it won't break at all, and it will actually start to rally back up. So the bars are 2-3 times the normal average true range of the last 5 or 6 bars. Like in this case, these are the normal bars. This is the exception. It's better just to avoid those trades. So remember that. It also has diverse applications for different instruments and time frames. We're talking about this right this moment on an intraday basis, but the same strategy, if you guys watch my nightly swing trading videos, the same strategy is applied on daily and weekly charts. Exact same strategy. Very important to understand. Also, don't forget, trail your entries to reduce the risk of reversion to the mean. In other words, you give up all your profits, and then it either goes back to flat or worse, you lose money like so many you have, and a lot of you paid tens of thousands of dollars to some of these very high-profile schools around the country to learn that strategy. terrible mistake in my humble opinion. So in the end, what we're looking for here is an accumulation bar and a downtrend. We want to go short below that bar, then we want to trail our profit. Stop losses are going to be one tick above the high officially, and you can go ahead and play with the 60% level and see if you're more comfortable with that to minimize losses for trades that don't go ahead and work your way immediately. Okay. Also, you want to trade in the direction of the BBT Pro Trader Pack or a very basic alternative, a 45-degree angled 20-period exponential moving average over the last 20 periods of the bar you're looking to trade. Now, for those of you that are my students have the Pro Trader Pack, you already have training on how to use those. For everybody else, 20-period exponential moving average, looking at that over 20 bars at a 45-degree angle. So basically what I'm looking at, this is a 20-period exponential moving average. And so what I want to see here is, and by the way, if your favorite moving average is a 19.26195 moving average, that's okay, because that's a secret one anyways. Or a 21 period, I'm just kidding about the 19 one being the secret one. But somewhere between 19 and 21 period simpler exponential moving average, I happen to use a 20 period exponential moving average. So what I'm looking for is I'm looking for a basic angle of attack over the last 20 bars to be about 45% there. The more shallow you make it, the more likely it is to fail. Okay, so let's take a look at some examples of this. So here you can see this is a weekly chart. This is a daily chart. These are some public charts I showed back when this happened, so I like to show things I did out in public so people can remember, or it's at least fact-based there. So so what we had here was a weekly chart at the time. Now, you see that beautiful downtrending 20-period moving average, and this one was trending down very nice as well. Well, so here's what happened. There's your bar. There's your 45% off the low. Notice what happened afterwards. It went ahead, not only stopped the market from going down, it actually went up the next couple weeks. Now, we got some great trades for that, don't we? And like stochastic spikes. Well, so then the market finally starts settling back down here. It breaks down, which is where we officially want to take that trade. It breaks down below the low there, and you can see it dropped from the 420 level down to about 390, dropped about $30 the rest of that week. All right, and so that's a great opportunity to go ahead and jump in a one-week trade if you're doing weekly options or so, for instance, or you're trading the underlying instrument and want to have short-term exposure to a trade. So then, of course, you want to trail it down. A great place to be trailing more aggressively would be right at the 400 level, so about $20 into the profit opportunity. But this one actually nosedived right through to the 390. Then it went ahead and hit one of my W pattern buys, which we'll talk about later, which signaled the end of the trend there. So as we go ahead, we look at the same time this was happening over here on this particular chart. It was happening on the daily chart as well. So now you got multi-time frame analysis. That's really important to the process. Love to see that. So here one had the 45% off the low. Notice that it sat there for 3 days at that level. 3 days it sat there, but when it finally broke, what did it do, gang? Just like over here, where it whooshed, just like over here on this one, where it whooshed, just here on the daily chart, it whooshed, okay? That's what we're looking for. We're looking for where that one or more institutions held the market up, but as soon as their inventory is dried up, we're looking for this market to go down big time, in a downtrend. All right? So each of these issues below, we're not going to go through each one of these individually today, but basically this is what we're trying to avoid here, and each of these is addressed by my Hoffman inventory retracement bar strategy, all right? And these are a lot of common trader mistakes on the buy side and the sell side, and this is what we're trying to address. So as we go ahead and we take a look, we got a market, we're looking for a market to be going down, we're looking for inventory retracement bars, we want to break down below them. But if we get an inventory retracement bar in the process of waiting that's even higher, well, then that could become the entry. And then you'll see in the process of waiting there, we got one that's even higher. So the initial entry is actually going to be on this particular one right here. And so that's the entry. Now, then you can follow it down. You're trailing down your profits, and then if you get pulled, stopped out on the pullback here, no problem. Then you wait for the next entry as long as you still have a suitable trend. Do we still have a suitable trend? Yes, we do. Over the last 20 bars, we got a nice downtrend. Here's another inventory retracement bar. Here is then the next opportunity to go ahead and go short. Or if this one here, because this was also an inventory retracement bar, that's an opportunity to get short a little bit earlier. Okay? So really great for entries and re-entries. Let's look at some actual live trading examples of this from some of my international trading competitions. And then we're going to start putting this together on multiple fronts. So right here, we're 45% off the low, and this was starting to go into the downtrend. That's why I had to wait, because we actually had some up above, but you can see we were really sideways at the time. So I had to wait till we started getting that trend. So we went ahead and we started getting that trend right here. So I went short right below here. What did it do, gang? Okay, what did it do next? Poof, right? Really nice. And that's the kind of thing you want to see, whether you're live trading in a trading room, whether you're live trading for yourself, or whether you're live trading in international competition. Love to see whooshes to the downside afterwards. All right, here was another one. And this was great because the judges were constantly in my ear asking me about my next trade, because everything had to be verified, validated, put on the screen. So I put the trade out almost 20 minutes in advance on this 2-minute chart. There we were in the downtrend, went ahead and popped back 45% off the low in the downtrend. I went ahead and I had the order out there to short, went short right over here. What did it do after my short was placed? These were live trades taking these competitions. It whooshed to the downside, okay? Whooshed very fast, and I trailed down very fast because that dropped very fast, as you can see. So I ended up getting another one right over here and then shorted it again. And what did it do? It whooshed again. So I had 2 trades there back to back using that strategy. Nice stuff. Then here was another one I took in crude oil at the time. And so what happened was we were in the downtrend. You can't see back here, but obviously you can see the angle of attack. We were in a downtrend. So then we had one of my inventory retracement bars. We were 45% off the low. I went ahead and went short right below there. What did it do, gang? Whoosh to the downside, okay? So really great stuff. That's the kind of thing that we're looking to put together there. All right, so do you remember this chart now? Let's go back and look at it again. And if we look at this, now we're looking for a trend. We're looking for bars that are 45% or more off their low in the downtrend. Okay, from there, we expect to either pop up or pop up just a little bit. If it pops up a lot, then I start looking for other trading strategies like my stochastic spike strategies for M's and W's and that. But what we're officially looking for this particular IRB trade is for it to get 1 tick below the low of this bar, look for a short. Then we're looking for obvious targets, daily, weekly, monthly pivot points, key support levels, higher lows of the day, week, month, and also when we're talking about several $100 stocks, we're talking about currencies, we're looking at round numbers. So like, in this case, the $400 level, very round number. We're looking at currencies. Then you're looking at the 101, 102, 103, 104, 105, 106, for the euro and stuff like that. Whatever currency you trade, the round number cent levels. So the question is, can you get back into a trade after you've taken a trade, you take your profit, are you done, or can you keep getting into more trades? As long as you're still below that 20-period exponential moving average and you have that trend still in place, when you see another signal, the answer is yes, you can go ahead and get into another trade opportunity, as long as you still have that trend. So over here, we had the trend. All right, you come down. It's very possible you could have been taken out with a trailing stop. You're trailing your stop too tight on this pop-up bar. You might have been taken out on this profit, so you would have made money, but you would have gone ahead and because of the pop-up, might have been taken out. Okay, so what happens? Well, then we generate another inventory retracement signal bar. Can I take that short if it breaks below the low? Absolutely, as long as I still have that trend, okay? So let's take a look over here. Right over here, we do not go ahead and have this one marked. Why not? It is an inventory retracement bar, but there's something going on here. That's right. What's happening here is we're sideways, and we went ahead and closed above the 20-period exponential moving averages. We do not want to take the signal bar trade, the inventory retracement bar signal bar trades, if we're above the 20-period moving average in a downtrend. That's a no-no. All right? All right, let's go ahead and keep going here. Now, here's the same great stock, the same great strategy, different trend. So let's look at this uptrend. All right, this was after Apple's split. If you guys were watching my nightly videos, you know I talked about this. I showed you these charts. So what happened was the Apple was clearly in an uptrend post-split. So what ended up happening was, well, you can see there's a bar that's 45% off the high in an uptrend. 45% off the high in an uptrend. What ended up happening? It broke above, took off. All right. well, if you missed that entry opportunity for whatever reason, you're on vacation, you were at work, that night you didn't do your nightly research looking for the upcoming trades like you can with this strategy. Okay, well then the next opportunity was only a few days away. There's the next one, 45% off the high in an uptrend. Where's your entry? 1% above the high, and then you're looking for a long. Okay, it's the same concept whether you're looking at a stock, futures, options, forex, same concept. All right, then over here, after that, whoosh up to the upside. Then we had two of them back to back over here, and once it broke one tick above the high, whoosh, took right off again, several dollars to the upside. Okay, if you missed that one, and you missed that one, and you missed both of those signals, well, then it still gave you another opportunity right up over here, one tick above the high. And you see what happened, whoosh. Now, it pulled back a little bit, but did it go ahead and get below the stop level? No, it did not. Okay, and so that's great stuff. None of these went and got below the stop levels. Okay, stops will happen, but if you're doing these right, you're expecting that these are going to happen. The stops are going to happen a lot less than the whooshes. Okay, that's the expectation if you're using it to apply it correctly. So, a couple things to keep in mind there. Let's look at some more examples. This is a trade that I took so over in Barcelona, Spain. I was teaching a class over there for TradeStation and doing some speaking over there. So you can see what happened. This was a nice combination trade. You got a nice trend to the downside. You see a stochastic spike. Put the cap on it. There's trade opportunity right there. Or you can see the very next bar then, back to back, how what happened here was it had the 45% off the low in a downtrend. Whereas the entry, it's just a tick below the low of that bar. Okay, what happened when it broke one tick below the low of that bar? And I see there's some great questions, and I can't wait to go ahead and answer some of those questions at the end if I haven't already covered it by the time we get through. I see some of the questions that I've already answered along the way, so that's great. So if we go ahead and we look here, what happened when it got one tick below the low with that beautiful downtrend in place? You got it. Whoosh, right? All right, that's what we're looking for, okay? Let's go ahead and think about a couple of things to remember. Trade with a reasonable trend. The more shallow you make the trend, the lower the probabilities of success with this trade, or any trend, trade for that matter. This trade's hello? Oh, I heard somebody's voice there. So as far as trade, there was a TradeStation event that happened in California a few years back, and what ended up happening was all of a sudden the gentleman comes back to me months later and says, "Rob, I don't understand. The strategy's not working anymore." And I'm like, "Well, I don't understand. The strategy is working from my perspective." And well, come to find out, what he had done was he originally had stuck more to the 45%. Then over time, he saw he still got tons of trades, and they seemed to work really well for him at 40%. Then he did 35%, and then 30%. Well, you get the hint. He started shallowing out the trades to the point and I'm like, "Why'd you do that?" He's like, "Well, I got a lot more trades." I'm like, "That's true, but then your P&L goes way down, right?" So you're going to get a lot more losses the more shallow the trend is. And so, like, this is an example of that in action. Basically, yes, the trend started to kind of kick in, but net it was more or less sideways in the backdrop. So you can see there's a handful of inventory retracement bars here that did go and they did work and they did push you a little bit lower here. But net, that trend was sideways. And when you have a situation like that, you have a very high risk. Like, here's an inventory retracement bar, spiked right back up the next bar. When you're sideways or virtually sideways, gang, you're going to have a much higher risk of reversion to the mean. So you really want to have a good quality trend. So there's an example of that good quality trend, right? And what did it do? Got short below it. Whoosh, to the downside. That was a live trade I took there in Spain. Two or more IRBs back-to-back or within 2 bars of each other can spell trouble for your trend continuation. So consider tightening your trailing stop from my perspective if you're in a trade, or possibly not taking the trade if you're thinking about going long at that point. So you'll notice, like right here, we were in a downtrend. We have an inventory retracement bar and another inventory retracement bar. What ended up going ahead and happening? By the way, I'm going to mute the microphones for the team, guys. Somebody's got an open mic. So give me a second there. We'll figure out who it is. I think it was Steve. All right, so Steve had an open mic. We got him. All right, so as we go ahead and we take a look, look what happened. Market reversed the upside. All right, so then over here, we got 2 of the inventory retracement bars back to back. What did it do? Came to the downside. All right, over here we had two inventory retracement bars within 2 bars of each other. It reversed the trade. Right over here we had 2 inventory retracement bars back to back, reversed the trade. Okay, so keep that in mind when we see 2 or more IRBs back to back. Consider tighten stop or not taking a trade. An IRB appearing on multiple time frames at the same time dramatically increases the likelihood of a market reversal. Okay, so what we had here was, you can see on a 2-minute, 5-minute, 15-minute chart, we had an IRB on all 3 of them at the same time. What did this market do? Came crumbling down. So if you start seeing, when you use the multi-time frame analysis, so if you're on a daily chart, if you see a daily chart and a weekly chart firing off an IRB, something to be very concerned about a reversal, all right? So those are things you want to keep in mind. When you see them on multiple time frames, very powerful. Also, the entire band of the IRB wicks or key support resistance levels until broken, it can be used as an excellent likely reversal point for market trend until broken. So here's a great example. So you got an IRB. Notice what happened. We pulled back out of it, pushed back in there, pulls back again, tries to get through. There's so much inventory, it just keeps selling off. Tries again, sells off. Tries one more time, and then just dies a horrible death. There was so much inventory up there. And by the way, at that time, gold went on then for the next several days to sell off pretty hard. So keep that in mind, that these inventory retracement bars are key support or resistance until broken. So here you can see, here was an IRB, all right, and so that made this this resistance level here. Look what happened in the next few days. Kept hitting it, failed, all right. Then, when that failed, it makes a new IRB, right here. Okay, so what does that do? Comes into it, fails. Comes right back up to that IRB, fails. All right, so you get the point. Then right over here, we had another IRB, and what ended up happening there was, for the rest of this chart, we ended up just sitting there. Okay, and that's all the data I had on it at that time. Kept hitting it, failing. All right, so keep that in mind. The entire band of wicks are support resistance until broken. Now let's put all these together with some other powerful strategies and see how this all works together. So we talked about the IRBs. Well, isn't it great? You have the IRB strategy itself, but you can combine it with like my stochastic spike strategy and the half spikes. Those of you that have my stochastic spike, my full spike and half spike course, that was the original course I put on for you guys a couple of years ago. Great how you can tie these together because the short-term retracements are a trade opportunity themselves, and then you get the classic IRB strategy that I've been talking about this morning. Nice combination of the two. Now, remember this chart on Apple? Okay, well, so we talked about this. There's your full spike. Then we've got my M's and W's, and of course, for 2 years I've been working on finally getting that M's and W's course out to you guys, and we finally did. So the M's and W's here, you can see that in the downtrend there, that identified the bottom. So I want to see it when I'm looking to short and I see a W, I want to back off. When I'm looking to short, I really want to see an M. That's a great indication of continuation. All right, nice indications of continuation. So using the M patterns with the IRB is phenomenal. In fact, you can see right over here during my trading competition in France, the IRB at the same time had the M pattern sell go ahead and form here on this bar. What did it do? Right afterwards, whoosh. So the M's and W's, very powerful. All right. Now, so remember, in a downtrend, you see a W. Watch out for a reversal in the short term. But then you got to my stochastic spike level, whoosh to the downside until it went ahead and actually got the next IRB trades that I took. Great stuff. Here, the trade in Barcelona there. One contract went ahead and $250. One contract broke below here. Whoosh, combined nicely with with a full stochastic spike. So then we talk about how we can use this as a stay out warning, right? So you may get great signals on one of your time frames, but if your higher time frames are firing off all of a sudden like a bunch of these IRBs, so like in this case, my 15-minute chart on the bonds here the other day went ahead and fired off 4 IRBs back to back there. And so what happened was, I'm like, wow, I got a great trade on the 2-minute chart. I'm thinking about going ahead and shorting. I look over, it's like, oh, no, that's not going to work. And what ended up happening right after? Wham! Right to the upside. People that aren't paying attention to these kind of strategies that I'm using would have gotten their head chopped off. Okay. By the way, you'll notice my W strategy worked very well there. I identified the reversal point. then we go ahead and so that was avoided loss. Then, like a trade that I grossed $1,250 on the other day, we went ahead and so what happened was this: I was in the short. We went ahead. We had an M pattern sell. Great. Okay, what we call a sloppy M pattern sell. It's in my M's and W's course. And then the market rolled back over. And what happened was it broke one tick below the low here. So I said, okay, I'm going to stay in the trade longer. So that helped me gross $1,250. Real money, real strategy. And there it is, from the XPOs, done live in front of my student audience there in my live trading room. Okay, well, so this was yesterday, gang. I went ahead and I was in a long DAX trade. I don't know why, but I did a bunch of DAX trading the last few days. I usually love bonds, gold, crude oil, stock indices, and others, currencies and that, but for whatever reason, I had some great DAX trades. The DAX was just moving really good with President Trump speaking yesterday, and so I went ahead and I got long, and I use this as an opportunity to get out. There's my IRB. Can everybody see the IRB? And there's my M pattern sell. So I went ahead and close out my profit right there. So I use these trades in my live trading room, my private trading, in my trading competitions around the world. Really important stuff here, gang. That's one of the reasons and what's helped me to win a lot of these competitions around the world. So what I've offered you guys today here, I just talked about the M's and W's course, and I'm going to take questions here in just a moment as well. So give me just a minute here, and we'll start doing questions. So what I've got for you is the M's and W's class is finally here. I know you guys have been waiting for 2 years after the original full spike and half spike class. The M's and W's is finally here, and what that includes is the actual indicator. We've got it available for a bunch of the different platforms, the entries, exits, profit, stop management, but it not only uses where to trade, but where not to trade. As I just showed you some actual live examples there, just from the last week, a week or so, just show you some examples, including up to and inclusive of yesterday, where to, where not to, where to get out of trades, and includes the actual indicator. And so what we've done is we put that together, and you guys can take a look at it at becomeabettertrader.com/more. And it's only $97 for the course, or you can call my office right now at 847-235-6131. I'm just trying to get through this fast so I can answer questions for you guys. So it includes a lot of stuff there. It's available, the indicator is available for all these platforms, ready to go, right here. Any of the trade stations, Ninja Traders, Multi-Charts, MetaTraders for my forex traders, E-Signals, Sierra Charts, also known as Infinity Charts, TOS, aka TD Ameritrade. It's available already, to go for any of those. It includes an installation video, installation guide, and installation help if you can't figure out how to do it yourself, so we can get you up and running right away. No more screwing around trying to figure out how to install things. I'm a trader, not sitting there installing things, so I get it. The settings are available for those of you that don't have any of those platforms. We give you the settings so you can set it up on your charts where you can adjust the stochastics. What this includes is one short side trade, one long side trade, specific entries, exits, and stops. This is not the original course from 2 years ago. This is brand new stuff that I just released in the last week. This will help you find precise award-winning entries for your personal style and trading plan, identify where the market is likely about to reverse and stop direction. In fact, we just talked about that. So if you think about that right here, we use this pattern here. It's a very specific type of pattern, so I go through all the rules and everything of what I'm looking for, and that just helped me. It saved my bacon from getting short on a trade that I would consider shorting otherwise had my patterns not gone ahead and presented themselves. And so this is very important for both intraday and end-of-day entries, so my full-time traders can get a lot more trading opportunities, and even my part-time and options traders can easily set up these trades with the methodology. Sure, I'll put the link in there for you one more time, or here, I just got the link in there for you. So then, again, I just use this to go ahead and get into a trade and stay in the trade to gross $1,250 in one of my bond trades here. Real money, real strategy. And you can see down below what I call my sloppy M pattern. So I got the classic M, the sloppy M's. We teach you all that stuff in the course. So, and then that combined with the IRB to make a real nice profit there. All right. Now, This gives you instant access to the course, the indicator settings. If you don't have the, one of those platforms, the ideas and strategies I don't share publicly. In fact, I kind of went above and beyond in this particular class because I want to make sure you're ready for incredible 2017. The rest of it here, hopefully yours is starting off well. Mine certainly has, and no other proprietary indicators required. You saw we focused here today on a 20-period exponential moving average and this particular stochastic with my custom settings. So you have a real advantage over everyone else, just like I do in my trading competitions around the world. I just went ahead and used this too yesterday, like we said, putting these things together. The IRB I just taught you, and then with the M's and W's course. Really nice. Got me out there right before the DAX ended up pulling back hard. So I walked away with my profit using that strategy. Also, there's a great bonus section. So normally I just teach the strategies in these, but in this particular M's and W's course, I also share the major factors that led to my biggest wins and biggest losses in my trading career and how I became the most awarded live real money trader in the world. I am the most awarded live real money trader in the world. I just say that to impress upon you that you're dealing with somebody who actually trades live with real money. So, that's kind of a big deal, and nobody else in the entire world can say that. And so it's a kind of a special event. Maybe that's why Jeanette wants to be staring on that island with me and Hubert. So who knows? Or maybe it's just like we like to shoot our long-range rifles, and so good stuff. But hopefully she can cook, because God knows I can't. Hopefully you guys were here earlier to catch that story. So here's what you're getting. 2 more simple setups for all markets. The exact indicator with the settings that I use that I need for these strategies. Bonus 1 is a section on private secrets to trading success that have made the huge difference for me between my biggest winners and my biggest losers. That's priceless. That's priceless. We just gave you one topic we talked about earlier, trailing stops. That was a big difference for me. I mean, that was my biggest loss in my trading career was not trailing a profit. Can you believe that? And many of you here today commented earlier how you went ahead and had profits on the board as well, gave them up and became losses. Well, cease and desist. So, also a follow-up Q&A session. I already recorded it last week with the group that came to my very first event of this, because we announced this 2 weeks ago, so they came last week to that. But we're going to be doing another one, and we'll send you an invite for anybody that gets this today. We'll send you an invite to the next Q&A session, so you'll now get the previous Q&A session. You'll get the next Q&A session as well. Yep, I'll cut the I'll get the link recopied in there for you. There you go. All right, and so bottom line is, whether it's helping me avoid losses, whether it is staying in trades longer, okay, that is, or it's helping me get out of trades I'm already in with a profit. These M's and W's are very, very powerful. So that's that offer. I'm going to start taking questions from you guys now. The link is in there. It's becomeabettertrader.com/more. It's a one-time payment of $97. I'm a trader. The trade I'm making here is, the bet that I'm making is, you see that course, you go ahead and learn from me, and you're going to want to go ahead and learn and grow more with me. Whether it's my videos, my nightly videos, whether it's my live trading room, whatever the case may be. Once you realize, wow, I see how he puts all this stuff together, this is awesome, and you see success in some way, shape, or form on your end, you want to go ahead and be part of our student family. So I make these basically virtually free offers to people occasionally, so that people can not have to pay thousands of dollars to realize if me, RobHoffman is the right trader for you to go ahead and help you be more successful in the future. I'd like to think so, being the most award-winning trader in the world, but that doesn't mean we necessarily would connect one for one. So at least this gives you a chance to go ahead and see for yourself. So let's see. Let's see what your questions are here. Yep, I did post the link, but sure, I'll post it. It's right here, becomeabettertrader.com/more, M-O-R-E. And then also, you can just call the office here, 847-235-6131. I've only got a couple of the team members here today versus, a full complement of staff. If you go ahead and miss them, just go ahead and leave a voicemail. They'll call you right back, okay? If you need, for some reason, to do it over the phone versus online, all right? And so these, let's see, we've got a lot of questions here. And, boy, where do I start? does the system work on tick or range bars? I do not use the system on tick or range bars. As I mentioned earlier, I use this on 2-minute time frames and above. Can you talk about the histogram used? Nope, I'm not going to talk about the histogram because it means nothing to this strategy right here. I want to keep you guys focused on very simple. Remember what I said earlier. You know, I've got multiple children at home. I have international competitions where I'm trading against people live in a huge audience, and a lot of these audience members are asking questions. I need something simple. 20-period exponential moving average and my custom stochastic setting indicator there. That's what I'm looking for this setup. Keep it simple, gang. Don't go ahead and overthink it there. Are they not lagging? Leading indicators not better. Gary, well, you know what, Jerry? You decide. Gang, I will let you guys all decide. Jerry says, are they not lagging? Leading indicators not better. Well, I tell you what, gang, let's go ahead and think about this for a moment. All right, so great question, Jerry. This one had kept me out of going ahead and getting into a bad trade because right when we locked in a signal that the market was about to reverse, I went ahead and saw that and decided, you know what, this is a buy signal, and I am going to take a short against that buy signal. So right when it locked in, and then after it locked in, the market went up. You guys tell me whether that's leading or lagging. It locked in and then went up, not after the fact. You guys go ahead and tell me. We went ahead and locked in an M pattern sell. As soon as we locked in my sloppy M sell, it went ahead then went down, not after. Okay, that looks like leading to me, doesn't it? I like that $1,250 profit, gross profit there as well. That's pretty leading. I like that leading into my pocket. That's real good, gang. Don't want to lead out. I want to lead into my profit. And then you guys tell me here. I went in, I went long in the DAX. I was long in the DAX here, and then we went ahead and locked in my M pattern sell, and we went ahead and locked in right there. And what happened? Very next bar went up a little bit more and then closed down here and rolled over. So you guys tell me, is that leading or lagging enough for you? All right. There's a reason I've won 23 competitions around the world. It was not for my good looks and charm. You guys saw my picture on my website. It's definitely not for my good looks. Okay. So perhaps some of Jeanette's charm will wear off on me, but it's definitely not for my good looks. All right. So the bottom line is, yeah, that's leading enough for me, gang. Okay. And so the bottom line is that's exactly right. All indicators are lagging unless you hit Rebecca Gold Star. She says it perfectly. All indicators are lagging unless you have a method like this to really read where it is headed. Okay? So, yeah, if e-trade allows you to change your stochastic settings, then you should be able to go ahead and match mine. Okay? So the bottom line is, what's the indicator? The indicator is the stochastic indicator here. That's this guy right here. This guy right here. See that thick blue line right there? It's the indicator with my custom settings in there. Okay. Well, good. Well, thank you. I appreciate that. Nice compliment. Pradi says, awesome webinar. All right. And so so awesome. With that being said, let's see. Do I have any other questions that we need to answer? All right. Great. Let's see. The trailing stop. John, can you explain the trailing stop approach a bit more in detail? I'm getting killed losing profit by not moving stops successfully, either too tight or too loose. Okay, so what we said about the trailing stop, all right, let me go ahead. Yes, I'll put the thing up real quick. Let me put that up again so you guys can see that. There's that. Okay, so while I'm getting back to the page, I'll lock that in for you. I'll put the link up there for you. Okay, so, all right, and it looks like everybody's on the phone right now. Guys, I'd encourage you to go ahead and do it through the electronic link or just leave a voice message, all right? Now, John, let me help you. Let's get back over there, to the stop management piece. It's going to take me a moment to get that far back in the slides, but I want to answer that for you real quick as well, all right? So remember now, so my trailing stop methodology, it's a progressive trailing stop methodology. The bottom line is I'm going ahead and as we're getting closer to my targets, I'm tightening up my stops. So think 50, 80, 90 price. 50, 80, 90 price. All right, that's what I want you to think about there. All right. So with that being said, we want to identify the target before Okay, that's part of the key. Get your targets in there. I use classic floor trader pivots there with that, not the ones everybody puts their names on there with. Okay, but the classic floor trader pivot formula, and also things like 50, 200-day long-term support resistance levels. All right, then when we're 50% of the way to the target, start trailing by 50% of profit earned. As we get to 80% of the target, then we're moving to 80% of profit earned. When we get to the target, then we trail by 90%, because what's more likely to happen? Most of the time it's going to get up there by the target, and it's going to pull back right away. Sometimes what will happen is it'll go up a little bit higher, blast through it. Everybody, that's where all the breakout traders come in, right? So here's your target here, this horizontal line. It'll break through the, everybody's, oh, that's it. It's breaking through the resistance. It gets me yesterday's high. I got to jump into that trade. Got to jump in. And then it turns right around and crushes them. So when it gets up to the target, I trail up by 90%. So putting it right up there. Then if it does break through, I just start trailing one for one for one for one. Okay, until it stops and reverses and rolls back through. All right, so that's what we're looking at. 50, so think 50, 80, 90 price. All right, like I said, those biggest lessons I learned was trailing those stops. Like I said, it took me from having that huge loss years ago to being a 23-time domestic and international real money trading champion. All right, so kind of a golden rule. And so I said 50% of the way to the target, trail by 50%. 80% of the way to the target, 80%. And then to the target, trail up to 90%. If it does happen to break through the target, has one more little hurrah to fake in retail traders, then I just trail up one for one. All right. So, John, I hope that helps there. All right. Yeah, you guys are great. Thanks so much. I appreciate all those nice comments and compliments. It means a lot to me. Try to really share a lot here. Keep it on time. I started a little bit afterwards. Well, that's great, Rebecca. And again, thank you. That was a very wise comment on your part earlier about, everything's basically, lagging unless you use it the right way. So try to give people tools here to use the right way. So, gang, well, hey, thanks so much. You guys are great. So what I'll do is, I'll put that link in one more time. I'll try to go ahead and answer a couple of phone calls myself because it looks like people are still calling in. But the bottom line is you guys are awesome. Jeanette, I want to thank you and, everybody here for making a great event. And I know my good friend Hubert's coming up next, gang. If you guys have a little more time of the day, at least try to stay for Hubert's event here. And Hubert and I have a lot of work that ties in very well with each other. We've done a lot of programs together. So he's not only a personal friend, but a lot of our work makes sense together. So I encourage you to stay around for him as well. But thank you so very, very much. Thank you. That's really nice. But Jeanette, I'm going to turn it over to you. I'm excited. A lot of nice comments and a lot of nice people there. Thank you.